everyone, this is Geeta from the Momentum Lab channel and welcome to this week's video. This week's video is a second in the series of a factor report where we comprehensively analyze the performance of various factor-based indices both from BSE and NSE. We also look at these factor-based indices from two different time periods. One is a short-term period for the last 12 months or 1 year, and second, a long-term period across the last 20 years. Without further ado, let's get into the video and find out which factors performed well and what are the different mutual funds and ETFs which are available in these top performing factor indices. So let's factor this. Before diving deep into the findings of our analysis, I would like to first take you all through the methodology that we have followed. So the first was to list out the different factor-based indices available both in BSE and in NSE. In BSE, we have 4 different factor-based indices, and NSE has 22 factor-based indices. The last time in September report, when we had done this analysis, NSE had 20 factor-based indices. In the last month, we see an addition of 2 different factor-based indices, which again, I will discuss later in detail. After listing all of the different indices, we have recorded the closing values of the last trading day of the month for each of the indices. For the sake of this video, we are going to be using the data from October 2023 to October 2024. The next level is to understand the performance of each of these indices. And for the same, we have calculated a month-on-month percentage returns. In the third step, to understand exactly how each of these indices performed with respect to their benchmarks and also in comparison to each other, we have calculated a ranking, given a rank from highest to lowest based on the percentage monthly returns of the indices. Rank 1 over here meant that that particular index performed the best, and so on and so forth. Further, a benchmark comparison was drawn for each of the index with its relative benchmark. So for all of the BSE factor indices, the benchmark that was considered is the BSE Sensex, and for the NSE factor indices, Nifty 50 was considered as the benchmark. Finally, to understand and have a comparable metrics across different indices, NAV values were calculated for all of these indices. Just to show you how the data points look like, here is a sheet, Google Sheet, that contains all of the data with respect to BSE and NSE indices. So these are the closing values. Then we have factor ranks, and we also have outperformance calculated for each of the index with respect to its benchmark. And then finally, NAV values. The same exercise has also been carried out for the NSE indices. To get into the findings, first, for the BSE factor indices, we see that there is a clear outperformance of all of the factor indices in comparison to the benchmark, which means that the enhanced value index, momentum index, quality index, and low volatility index of the BSE have outperformed their benchmark, which is the BSE Sensex. Enhanced value, or commonly known as value index, and momentum index taking the top 2 ranks of the BSE factor indices in the last 12-month period. The factor ranks also helped us identify which factor index outperformed the benchmark how many number of times. And when we have calculated the percentages, it is a clear indication that the BSE momentum index has outperformed the BSE Sensex index 69% of the times. The other 3 indices, enhanced value, low volatility, and quality, have outperformed its benchmark 54% of the times. So we have also calculated the percentage number of times that either the benchmark or the strategies held rank 1 or 2. That is the top 2 ranks in the last 12-month period. And the results are fascinating, where the BSE Momentum Index held the top 2 ranks 54% of the times, being the highest, followed by Sensex 46% times, and then the BSE Enhanced Value at 38% number of times, and then low volatility and quality index sharing equal percentages at 31%. When we take a look at the data numbers of how different factor indices ranked during this period, we can see that there is a clear factor rotation that is happening between the factors and also its benchmark. In fact, a close observation will tell us that in the last 3 months, that is August, September, and October, the BSE Sensex happen to hold either the first or the second rank. And closely following the Sensex is the BSE Low Volatility Index, which held one or two ranks two number of times in 3 months. In the month of October 2024, we see that across different factor indices and the benchmark of BSE Sensex, the returns have been in the negatives. We have seen this broad trend across the market as well, and we only have to wait and watch to see what happens. However, the year-to-date returns still are in positive for all of the different strategy indices and also the BSE Sensex, with momentum index having the highest return, followed by enhanced value, then the quality and low volatility. BSE Sensex still is at the bottommost in comparison to all of the factor indices. Now coming to the NSE indices, we have an addition of two new indices, like I said before, which is the Nifty 500 Multi-Cap Momentum Quality 50 and Nifty Quality Low Volatility 30. So with the addition of these two indices, the total number of indices in NSE that we are evaluating based on factors comes to a number of 22. The performance of NSE in factor indices is akin to what the BSE has shown us, wherein there is a clear factor rotation happening between all of the different factors across different months, with the Nifty Small Cap 250 Quality 50 having the highest frequency of being in the top one or two ranks. And this rank is also shared by the Nifty Small Cap 250 Momentum Quality 100. So 23% of the times, these two factor indices have either held rank 1 or rank 2. This is closely followed by value indices, where Nifty 500 Value 50 had it 15% of the times, followed by Nifty Alpha 50, and then Nifty 100 Alpha 30, and Nifty 100 Low Volatility 30. So while there is a clear factor rotation, there are also 4 or 5 factor indices that are clearly standing out by holding the top 1 or 2 rank across the last 12 months. Now, if we were to generally look at the top performing indices of the NSE, we have identified 6 top NSE factor indices based on the NAV values across the last 12 months. The first is Nifty 500 Value 50, followed closely by Nifty 200 Value 30. In the third rank is Nifty Alpha 50, and then we have Nifty Midcap 150 Momentum 50 and Nifty 500 Momentum 50. If you see, these 6 NSE factor indices are based on 3 factors, large factors. One is value, the second being alpha, and the third being the momentum. The case with each of NSE indices also remains very similar to that of BSE, where the last 1 month or October 2024 saw negative returns across all of the factor indices and its benchmark, the Nifty 50. However, when we look at the year-to-date gains, they are all in positive and upwards of 20s and 30s, with Nifty 50 having the least, which means that all of the factor indices or the top factor NSE-based indices are performing better than their benchmark of Nifty 50. So finally, to put together, we have brought 5 factors sharing both from BSE and NSE to be listed as the top 5 factors in the last 12 months. The list includes BSE Enhanced Value, BSE Momentum Index, Nifty Value, which has 2 indices being represented, Nifty 500 Value 50 and Nifty 200 Value 30. Fourth is the Nifty Alpha 50 or the alpha factor. Fifth, we have momentum factor also being represented by 2 different indices. That is the Nifty Midcap 150 Momentum 50 and Nifty 500 Momentum 50. Here we have listed the available mutual funds and ETFs across the top indices in the last 1 year. For the BSE Enhanced Value, we have Motilal Oswal with a tracking difference of minus 3.61. And Motilal Oswal also offers an ETF in this category. In the BSE Momentum Index, we do not have any mutual funds or ETFs being offered. When it comes to the Nifty 500 Value 50, we have 3 mutual funds being offered, UTI, Axis, and Bandhan. So wherever you are seeing an NA value at the tracking difference of the last 1 year, we have to understand that these funds are very new and have not completed a period of 1 year. Therefore, a particular value for tracking difference of the last 1 year is unavailable to us. So only the UTI mutual funds offering of Nifty 500 value 50 has a value listed for the tracking difference error in the last 1 year. Even in the Nifty 200 value 30 category, we do not have a mutual fund or an ETF being offered. For the Nifty Alpha 50 category, for domestic mutual funds, we have a Bandhan mutual fund, and for ETFs, we have Kotak Mahindra offering an ETF. In the Nifty Midcap 150 Momentum 50 space, which is a space that is picking up pace very swiftly, we have 3 funds that are being offered. If you remember, in September, we only had 2 funds. Kotak Mutual Fund is a new addition in this category, making the total offerings as 3, to include Edelweiss Mutual Fund, Tata Mutual Fund, and Kotak Mutual Fund. Again, we do not have any ETFs being offered for this particular factor index. When we come to the Nifty 500 Momentum 50 space, again, we have 3 new mutual fund offerings from Motilal Oswal, Nippon India, and Bandhan, and 1 new ETF offering from Motilal Oswal Fund House. Like we always keep saying in different videos of ours, the 1-year period probably provides us a good understanding into the trends of what is happening in the last 12 months to also let us see which direction the market is taking. It is, of course, not a very reliable indicator in terms of the kind of returns either the benchmarks or different in factor indices have provided. So given that we have an availability of robust data of Nifty indices over the last 20 years period, which is from 2005 to 2024, we have decided to perform a long-term analysis of how different factor-based indices are performing, and then to find out which of these factor indices are performing the best. If you see, for this long-term segment, we are dealing only with the NSE indices. That is because the data that is available for BSE factor indices is slightly shorter in time span, and the data that NSE contains is pretty robust, spanning across a time period of 20 years with several different data points and data sets available. We have also made an in-depth video about these NSE strategies, how we have calculated and arrived at the CAGR values, rolling returns values, the drawdown and volatility values, etc. I will be linking that video in the description over here for you to go back and understand the methodology in detail. To briefly explain to you what we have done, we have calculated a CAGR since inception. We have calculated 3-year rolling returns of CAGR rolling returns. We have also calculated maximum drawdowns, volatility, Sharpe ratio, and included all of these different elements to give a particular score to each of the index. And this score also has resulted in helping us giving a final rank to all of these indices. Based on this data, what we are able to see is that the newly added Nifty 500 Multi-Cap Momentum Quality 50 Index is ranking 1 with the best performance in most of these categories. This is followed by the Nifty Mid-Small Cap 400 Momentum Quality 100 Index. And in the third space, we have Nifty Mid-Cap 150 Momentum 50. The fourth rank is being shared by Nifty 500 Momentum 50 and Nifty 200 Momentum 30, making these the top 5 performing factor indices in the NSE space in the last 20 years. We have also put together a list of the top performing indices and respective mutual funds and ETFs being offered in these particular categories. I would like to bring your attention to the detail that momentum-based factor indices have occupied the top 1 to 5 ranks across all the factor indices in a long-term scenario. The first being Nifty 500 Multi-Cap Momentum Quality 50, which is a new index and does not have any mutual fund or ETF being offered at the moment. The second is Nifty Mid-Small Cap 400 Momentum Quality 100, which does not have a mutual fund, but Mirae Asset Fund House is offering an ETF. The third is Nifty Mid-Cap 150 Momentum 50, which has 3 fund offerings, Edelweiss, Tata, and Kotak, with Kotak being the most recent offering. In the third category of Nifty 500 Momentum 50, we again have 3 new mutual funds by Motilal Oswal, Nippon India, and Bandhan. We also have Motilal Oswal offering an ETF in this particular category. Now, Nifty 200 Momentum 30 is the most popular category of factor index, which has 11 offerings across both mutual funds and ETFs. So we have Bandhan Mutual Fund, HDFC Mutual Fund, ICICI Prudential, Kotak Mahindra, Motilal Oswal, UTI, and Baroda BNP Paribas offering mutual funds. and Aditya Birla, HDFC, ICICI Prudential, and Motilal Oswal offering ETFs. We can also clearly see that HDFC Mutual Fund and Baroda BNP Paribas are the new entrants in the mutual fund space for Nifty 200 Momentum 30. Finally, I would like to take your attention to an important aspect while selecting mutual funds or ETFs. If you have multiple offerings in the same factor index or in the same index, there are two particularly important indicators which we have to look at. One being an expense ratio. The expense ratio has to be lower. So a lower expense ratio translates into higher net returns for investors. So what we have to look for is a lower expense ratio. The second indicator is the tracking difference error, which we have provided over here in the list for your easy analysis. The tracking difference error is nothing but a measurement which tells us how closely this particular mutual fund or ETF is mimicking its index. So naturally, a lower tracking error is the better because it means that a fund with a lower tracking difference error is closely mimicking the index. Therefore, the chances of getting the returns that the index has promised is higher. Now, to conclude, in this particular factor, this video, we have seen how different BSE and NSE factors have performed in the last 12 months from October 2023 to October 2024. We have also listed the top 5 factors in short term and listed 7 different indices in these top 5 factors for the short term period. We have also discussed different mutual funds and ETFs being offered in these top factor indices. Second level, we have also looked at how different Nifty-based factor strategies have been performing in the long term, which is the 20-year period from August 2005 to October 2024. And we have also listed top 5 performing factor indices, which have largely come out to be momentum-based. We have also listed different domestic mutual funds and ETFs being offered in this category for long-term top performing factor indices. And we have also looked at how we have to choose a mutual fund if there are multiple being offered in the same category. Thank you for joining me in this video, and we will bring you the next factor this report in the month of November.